The most important level in the market right now is this 600 level on the SPY. We're seeing a net positive 390 million gamma exposure in the options market at the 600 strike. And what makes this even more of an important level is that we actually tagged this back on November 11th. The market opened up at the 600 level on SPY and basically retraced and has been trying to find some footing at the 585 level before bouncing again back up to 600. So we closed on Friday at 595.51. So we have just under 1% to go to get back up into this 600 zone. The market overall is currently in positive gamma exposure territory. The 0 gex line is at this 590 strike here on the SPY. And so as long as we remain skewed to the upside in the options market, our bet is that the market heads higher, aiming towards this 600 level into December. If we can break above this resistance zone at 600, 605 is going to be our next likely target. And I think there is a high probability that we are in this zone between 605 and 600 within the next few weeks, probably before December OPEX, which is December 20th. Interestingly, when we look further up the options chain, the 615 level is actually the third most important level, and more market participants are buying and selling calls at this 615 strike. And so it's about to surpass this 605 level in terms of importance. So there's 195 million net positive gex at the 605 strike, and currently there's 191 million net positive gex at the 615 strike. So this is all indicating the growing importance of these levels to the upside, that market interest is growing for a year-end rally. So let's head over here to our standard view of our gamma exposure chart. And you can see the dealer cluster zone is between 600 and 610. This is the immediate zone here that we would expect to see some sort of consolidation or pause if we do get up into this level. And so even if we have a big surge, let's say this week heading into December, we would expect some pullback possibly to the 600 strike before a continuation up into further levels. And that's just generally the way the market grinds higher in these type of positive gamma exposure environments. So in our last several videos this week, we've been highlighting the importance of this 585 level. We really needed to see this hold as support. This was previous resistance back here in October multiple times. And so we really needed to see this hold as support, which it did. If the market begins to break down based on some unexpected events, some geopolitical events or something of that nature, this 585 is going to prove a crucial level. If we break below that, our next targets are going to be 575 and 570 to the downside, which I would expect if 585 breaks, that's going to hit very, very quickly. So that is something to watch. I would hedge myself below this level here. And in fact, we are using the SPY to partially hedge our portfolio, which we discuss in our community Discord. I'll put a link in the description below if you guys want to check that out. Next, let's jump over to small caps. We'll take a look at the IWM closing at 238.77 as of Friday. And the rally over the last several days has been pretty intense. We're almost back to the recent highs here, breaking above that 240 strike on November 11th, and we're almost back there. You can see the largest gex is currently at the 240 strike. We do have volume coming in at higher strikes at 250 and at 245 here. This is over 80,000 contracts here at the 250 strike and 71,000 contracts at the 245 strike. On Friday, that is a lot of volume coming in at prices that are 5% higher than where we're currently trading. The second largest net gamma exposure level is at the 250 strike as well. It looks like market participants are continuing to position bullishly here on IWM. I'd expect a little bit of consolidation here at this level and a continuation up to 250 if we can break above this previous high. So IWM looking super interesting heading into year end. This is the catch-up trade, small caps and mid caps that have really not performed this year. Every single time it reaches one of these major resistance levels over the last several months, it has rejected. And so we really need to break above this dealer cluster zone. And basically the way to do that is more volume coming in at higher strikes, gamma exposure growing. Those gamma effects will eventually draw price higher as momentum continues to grow. So this is all speculative for now. The first thing we need to watch for is a break of the 240 strike and then a break of this previous high. So all of that is going to be on our radar this week for sure, and we're going to be discussing this in great detail in our community Discord. Next, let's take a look at the Qs. Not doing quite as well as small caps. We did have a big boost following the election. We got the rollover here coming out of our dealer cluster zone. Similar to the S&P 500 and SPY, we did have some support at the 500 level on the Qs, and it really hasn't gotten off the ground yet. We're just barely at the zero gamma level here on the Qs. I think if we can get some momentum coming in to mega cap tech, that's going to be a huge push for the overall market. We'll see if fund managers are chasing this into year end. Currently, the gamma exposure is concentrated between 510 and 505. We've seen this narrow concentration for the last several weeks, basically hovering between 500 and 505 and 505 and 510. And so if we can just get a little further push higher, maybe some consolidation around 510, there is the potential that we could also break out on the Qs. That is a lower probability, in my opinion, before year end, but I think that's something that needs to be considered as far as mega cap tech goes. Let's head back over here to the SPY, and I just want to point out a couple of important details about the current gamma exposure environment. We do have positive total gamma of 827 million, but what exactly does that mean for us? That number by itself is kind of meaningless until you have a historical range to compare it against. And our historical range on the SPY for the last many years has been negative 4 billion on the downside and positive 4 billion on the upside. This is our zero line. So if we're on the left side here, we're going to be in negative GEX territory. And if we're on the right side of the gauge here, we're going to be in positive GEX territory. And why is that important? Well, number one, if we get to the extreme end of either of these sides on the gauge here, we can know that there is oftentimes a potential reversal that can happen at these levels, or at least a pause. We see the reversals tend to be more striking on the negative GEX side. So when we get to like negative 2 billion or negative 3 billion gamma exposure, which is all the way down here on the gauge, that tends to be a major reversal zone. Of course, we haven't been in that scenario in quite some time. Most of this year has been in positive gamma exposure territory. And so where are we now? We're at 827 million, and you can see there's a long ways to go here in terms of the gamma exposure structure. That basically means that dealers are buying dips and selling rips. And let's come back up here to our main chart. That's actually very similar to what we saw recently. We peaked out here at 600 on November 11th, and we had a 2 to 3% dip down to the 585 level. And this is a great example of a gamma exposure setup. Dealer cluster zone signals that dealers are selling at prices at or above the 600 strike. We saw that come in right away as we got up to 600 here on November 11th. Dealer selling pressure kicked in. Dealers are selling the underlying security to hedge the option positions that they're holding. We dipped all the way down to the zero GEX level. This was actually the previous zero GEX level about a week ago, was at the 585 level. And you can see we bounced off that zone a couple of times. These levels, of course, update in real time, and we track that on our gamma exposure dashboard. And this was the perfect setup for buying the dip. So let's look at a few other key areas in the market where market participants are focused on right now. GLD, gold, one of the major areas. We saw significant dip all the way down into this dealer cluster zone between the 235 and 240 strike. That was a great buying opportunity. Has bounced since to the 250 strike. We now see the largest gamma exposure concentration is back yet again at 255. And if we scroll higher here on our chart, one of the things that we'll notice is that gamma exposure does appear to be growing at these higher concentrations. We see GEX growing at 260, 265, and the 270 level. That's something we're going to keep our eye in heading into 2025. These are potential targets here in the next 60 to 90 days. And so that's something that we are both trading for and watching very closely in our community Discord. Another name very important to the market that we are watching and trading is Tesla. Tesla had a very important zone here between 350 and 360. We've tagged this 360 dealer cluster twice now, including on Friday. Tesla continues to see a lot of bullish positioning in the options market. Over 100,000 contracts traded on Friday alone at the 400 strike. We can see that is one of the reasons why the gamma exposure at 400 is so strong. And so we may see some more consolidation between 350 and 360, but eventually we think this positive momentum continues. A breakout potentially up to the upside. I don't know if it can make it all the way to 400 by year end, but that is certainly within the realm of possibilities according to the gamma exposure data. Netflix is another name that we've been watching and trading throughout the last several months, tagging this 900 strike Thursday and Friday. This is the largest gamma exposure concentration and has been for the last several weeks. You can see the movement in Netflix has been breathtaking, just coming from the mid 700s all the way up to the 900 strike, almost in a straight line, not giving investors a chance to get in hardly at all. We do expect to see some resistance at this level entering into this dealer cluster zone, so I wouldn't be surprised to see some consolidation or a pullback even back down into the 860 or 850 range. This is our lower dealer cluster zone. Anywhere in this range, though, looks like an interesting opportunity to enter for another leg higher. We do see what looks to be the beginning of gamma exposure growing at some of these higher strikes, and we see pretty decent volume coming in here on these higher strikes as well. So that's something to pay attention to over the coming days and weeks. Be sure to head over to our website, geeksoffinance.com, if you want to get access to our gamma exposure dashboard and our option flow analytics tools. I'll put a link down in the description below. You can also access our community Discord. We have a lot of great traders in there discussing market analysis, trade ideas, and what they're doing in their own portfolios each and every day. That's definitely something you want to check out. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.